Yeah, I'm looking forward to this one, especially that we're going to be talking about stocks. And I think this is, apart from crypto, probably one of the hottest topics in terms of investing. If you say investing, people first thing they think is the stock market. So it's best to maybe try and understand that market a little bit. So I'm looking forward to learning and also being here with you today.
Perfect. Just a second to put it on mute. All right, so I put it on mute on YouTube because otherwise I was hearing myself like twice, because usually you have a delay in a few seconds while you are live on YouTube. So thank you very much. Welcome to everyone. Thank you for watching live on YouTube as well. And we are here to discuss about a new podcast episode of the for the financial education for teenagers on every Thursday at 7 p.m. UK time. So thank you very much for watching us live as well. And so I'm just excited about today's meeting, especially because today for me is also a special moment. I was almost to have the fourth baby like few hours ago, but we still need to wait. So I'm happy that we have this webinar, because otherwise I have to postpone it. So it's exciting. This is also for the history, and I'm excited about today's webinar because I'm looking forward to add a lot of value to our audience. We are waiting for other people as well to join us and make sure that we can answer to those questions and add value to them. By the way, this morning I had a very interesting meeting with a business coach, and I registered another podcast episode about mentoring about the startup world. And definitely I'll once it's ready, I'll send you a link to listen, because I will have a weekly event with her as well, 15 minutes. So with some questions, how we can help our audience to make sure that they don't make the mistakes and save time.
That's very exciting. Did I understand correctly that this is something that's going to be happening every week?
Yeah, it will be happening every week. It will be a very short episode, 15 minutes. We'll take also questions, and anyone that is embarking in this journey of the startup world can ask any questions, and my colleague will also answer these questions in order how to prepare yourself to have a better communication with your audience, with your team, with your customers, because I think it's important to make sure that you communicate properly and you present yourself in the right way. And because most of the times, usually most problems come when you don't have enough communication, maybe when you don't prepare yourself. And but okay, this will be the other it will be about a different subject, so let's focus on the today's subject, which is about stocks and different kinds of short-term, medium-term, and long-term investments. How you can transfer, for example, maybe a bad situation into a good situation if you have the patience skill.
Of course, yeah, and I think before everyone joins and we actually start, I think it's really, really powerful that you're doing a live webinar while awaiting a fourth baby. That's not many people do that, I believe. it's one to put into your bucket list for sure. And yeah, I'm very excited about this one, especially as you said, to prepare us for investing in real-time stocks and bonds. And let's welcome our participants, and then we'll jump straight into it. Hello, Perfect. Connor, how are you?
Yeah, you can unmute yourself.
I think that's just like a customary thing that everyone does at this point, doesn't it? Talks into a muted microphone. No, it's good to be here. It's good to see your faces. I missed the other 2 weeks, so I'm like really grateful to be here, and I've been watching the other videos, and I thought they were so informative as well. Like I was quite enlightened by some of the stuff that you touched on, like, so it was really cool.
You're welcome, Connor. Hi, Tomek, you can unmute yourself as well. Welcome.
Yeah, hello. Yeah, I'm also happy to be here again. And yeah, looking forward to hear something interesting today.
We're welcome. I hope I can add value to you, and it makes it worth your time to be here. And I'm looking forward to answer to any questions that you might have. By the way, I'm curious to read what is the message on your shirt.
Oh, it's in Polish, so you might not really get it, but it's called, it's the name of the theater festival I was at. So yeah,
Nice.
that's it.
Nice. I think it's important also to combine culture, because everything in a big organization, you need to have a organizational culture, and I think is about attitude, is about behaviors, is about how do you project yourself as a leader of that organization. So I think it's important to make sure that the message that you believe in, you expose those messages. So we have another person that is joining us, Hannah. So she will also join us. Hi, Anna.
Wonderful.
Welcome today. You can unmute yourself and you can put yourself as well on video as well. Welcome, Hannah.
Hello.
Hi, do you hear us?
Yeah, I hear you.
Oh, perfect. So welcome today. How is your day?
It's fine, thank you.
Perfect. Where are you based now?
Sorry?
Where are you based? Where you are now?
I'm in Warsaw still, but I'm moving to Copenhagen in 2 days.
Oh, nice. Very good. You change the culture, you change the environment.
Yeah.
Very good. I think you will enjoy Copenhagen, and you said in Copenhagen you'll go there, right?
Yeah.
And I think you'll enjoy and you'll see a different culture because they collaborate very well, and you'll see that we are based with we are used to with a different kind of culture, like competitive culture, but you'll see that they appreciate more like cooperation and collaboration.
Okay, I'm looking forward.
One of the happiest countries in the world, if not the happiest country in the world. That's beautiful. That's amazing. Well, as you can see, Florin, now we've taken over. Salski family is here, ready to be educated.
Nice.
So one question for everyone before we start, as always. Guys, one sentence. What would you like to get out of this workshop today? What are you hoping for?
Connor, you can start if you want.
What is the whole thing about first? What is the
stock and shares, my friend?
Oh, beautiful. Then I'm really excited because I've taken a plunge and got myself some crypto. I know that it might vary on what stocks and shares is, but I'm really excited to learn more about it so that I can go off on my own and make my own journey with this. So yeah, I'm really intrigued now. That's cool.
Beautiful.
How about you, Tomek?
Yeah, well, I would like to get the most out of what you will say. So yeah, the closest to 100%, that would be ideal.
Amazing. And you, Hannah, what motivates you to join this meeting?
I just wanted to see how it looks because I like to support Wojtek, and I just wanted to know how it looks and what I can learn here. So I don't have much expectations, but I just want to see.
Perfect. Perfect. Please prepare any questions that you might have, because at the end you can ask those questions. Doesn't matter how simple it might look like. So it's important to ask those questions, because I'm here to add value to you, and I'm very happy to because I'm considering this kind of education webinar like I'm teaching my kids. This is how I'd like to be. This is how much I care about you, all of you.
Great.
Wonderful. Okay, guys, so for now, as always, if you could turn off your cameras and turn off your sound, and we're gonna jump right in. Basically, as Florin mentioned, feel free to either put some questions in the chat or note them down as we go, and we'll answer them all later on. It's worth to mention here, because I don't know if you've heard, Florin is about to have his 4th baby, like literally probably today or tomorrow. So he means business when he says that he's doing this for his children, because he managed to join us today, even though, you know, there is a baby on the way.
Thank you so much. Yeah, thank you for the message, Connor. Definitely, I'm here because I like to be consistent, and this is what is all about: consistency in everything you do. And whenever you do something with passion, this is the passion need to transpire from all your skin, basically, to understand that you love what you're doing. And I'm very happy to be here. So we can start VoiceTech, and let's dig in this wonderful subject that we can talk about for days, I think, but let's be concise.
Of course, yes. So first and foremost, yeah, remember, guys, that consistency beats talent every day. So something like this showing up is, according to, I think, Woody Allen, 80% of success. So today we're going to be talking about stocks and shares and different options of investing on the stock market. And this may sound a bit overwhelming at first. I know it sounds for me, and still is quite overwhelming, to be honest, but we will try to digest it in a way that is useful for you. And at the end of the day, this is just the beginning of your journey. So remember that whatever you do not know after this session, you have plenty of time to learn, and the best way to learn is actually to experience it. So before we even dive deeper, I want to ask you, Florian, could you briefly introduce to us what is equity and what are those stocks and shares that we're referring to?
Well, when you think about equity, you think about the total capital that any shareholder have in a company. So the bigger the company you are investing in, you have more liquidity. Basically, especially if the company is traded publicly, you have more liquidity. And I think it's important to have a big pool of investors that are investing in the same company. If you want to have liquidity, because otherwise you might not get out of that trading position if you don't have enough liquidity. And usually when stock market crash, is happening because there is not enough liquidity in the market. So I think it's important to whatever you choose. If you are like a person that likes less risks, in this case you choose a bigger company to invest in. If you are a person that likes to take more risk, you can choose a company that is more at the beginning of the journey, but you have more risks. It's important to understand what is your psychology in regards to risk, and how is your appetite to take a loss.
And here, guys, before we dive yet again and bring you back to this idea of, you know, the risk and reward and the appetite and greed and fear and greed index, I just wanted to rephrase maybe the word liquidity, which may sound a bit alien to you. Imagine a water that you pour from one. Hello, Sandra. Just turn off your camera for now. We'll continue with this, and then feel free to join us. Remember to write down all the questions you have as we go. So what I was saying is, with liquidity, the way that you can maybe portray it to yourself is if you imagine water, which is always adjusting to what you pour it in. This is the difference between, you know, putting, let's say, a bunch of rocks into a cup and pouring water in. So if what Florian said, if the certain company stocks are liquid, that means they have a high liquidity index, let's say. That means that they are easier to sell and easier to buy on the market. There is a bigger demand on the market for them, and you're more likely to sell it. For example, this is what we've talked about last week when we mentioned gold as one of the most liquid assets you can have in the world, because wherever you go, everyone will accept gold as it is of value, because we've agreed around the whole world that gold has an inherent value to itself. So now coming back to what you were saying, Florian, could you tell us what is this idea of fear and greed in appetite and how does this affect our medium, long-term and short-term investment strategies?
Well, whenever you think about fear and greed index, this is very important index that you need to take into consideration whenever you want to make a decision about investing in a stock. You always need to look before this, before making the decision, to see how is the fear index, how is the greed index looks like. Because if you are in a fearful market, in this case, you need to take strong decisions, and you need to make sure that you go against the wave. So if everyone is selling their shares, that is the moment when you should start buying. So you should start buying, but not everything in one go. You should buy in steps, basically, because you might get that kind of stock, for example, even cheaper than, for example, you have a stock which is $100, like an example, and then you start buying, but then the price goes down at 80. And what you should do in this case, most of the common sense, they will start selling, which does not make sense, because you lose money when you sell inconveniently. So basically, if you hold and then you sell it later, maybe this kind of strategy from a short-term strategy become a medium-term strategy or a long-term strategy. But you always need to put into balance how much you can afford to wait and how much you can afford to lose.
This is very important and very powerful, and I think especially for those of you guys who missed some of the class before or did not participate before, one of the most important thing that Florian refers to is the idea that you do not play with money that you're not able to lose. In terms that, especially when we're talking about investments, no matter if it's long-term, medium-term, short-term, they may not come out the way you would want them to. So do not risk money that you need for essential stuff in life. For example, if you need to pay your rent or buy food. When it comes to this fear and greed index, I think this is very powerful, and I remember you, Florian, mentioning it before. This idea that even if let's say that you bought it when the stock was $100 and it went down to 80, the fear here can happen when people see the drop and they don't want to lose more, so they sell. And this is the moment when they lose that 20%, let's say, for example. Whereas if you can afford it because you don't need to get that money out straight away because you've invested medium term or long term, for example, then you can weather it out. And when Florian says that when everyone is selling, you should buy, this is what we're talking about. You know, people during the depression and during the inflation being a big problem, people that have money to spare and can invest are the ones that are winning the most in the long term. And this is why, as long as you have money on the side that you would like to invest and you don't want to touch it for the, let's say, the next 2 months, 2 years, 2 decades, this is the money that you might potentially put in a stock. Even if it will go down a little bit, you just let it be there, because you know that at the worst case scenario, you will lose what you've put, and that's okay. You know, you've agreed to these terms as you played the game. But the thing is, you can wait the long term and you can get out in the positive. So here I wanted to ask you, Florian, the stocks and this idea of what is a stock? How does this work? Because people might say, oh yeah, I own some stocks from Apple. What does that mean? Do they own a desk in the Apple's office, or how does a stock works for a company?
Basically, the stock is equal to shares. So basically, most of the time, stock is like an American term of shares. So basically, like whenever you have a stock, because you say it's the same thing. Basically, stock and share is the same thing, this is what most of the time the people in America use for the term of shares. They don't use shares; they use stocks, the term of stocks. So basically, I think because you become a part owner of that company whenever you have a stock. Basically, like a stock in the trader's term means shares. It's same value. The thing is important whenever you choose this, you choose wisely, and you choose how is the market trend. You look always on the trends on the market, and then you decide if you invest for short term, if you invest for medium term, if you invest for long term, and then you are not emotional. So basically, if you take emotional decisions, this is when you make mistakes. If you take smart decisions, basically you have a clear strategy what you want to do. In this case, you don't have to stress too much of yourself, because this is when you make mistakes, when you become stressed.
Of course, and if anything, guys, this might be very easy to relate to whenever you had to take that exam that was really overwhelmingly stressful, or you know, when you're preparing to do something that feels a bit outside of your comfort zone. Emotions can really take over and sometimes make us make mistakes, even though we've prepared or we are ready to do it, but we thought about it too much instead of actually taking action. And I think a really fun thing to mention here is the fact that with stocks and shares, the world is full of them, which means that you don't necessarily have to invest in something that you have no idea about. Maybe you're passionate about car brands. Maybe you're passionate about wine. Maybe you're passionate about Apple. Whatever you're passionate about, I think it might be quite useful, especially at the beginning, to look into and research those things that you believe in, or at least you see them as something quite worthy to look at. Because if you want to dedicate your time, and we're going to talk about that in a second, if you want to dedicate your time to make sure that you take a more informed decision, you better be dedicating it to something that interests you, because otherwise you will feel like on those classes when the teacher is boring you to death and you still need to hold on your seat and not fall asleep. It's going to be very difficult to advance in that area if you're not really interested in it. So for example, if you want to try your strength on the stock market, or consider stock and shares as part of your investment portfolio, maybe try to figure out what would you like to learn more about, or maybe what you know a lot about, because there is market for everything in that regard. So right now, Florin, I wanted to ask you, in terms of different types of stocks, we've already talked about it before, but I think it's important to note. We know that there is a single stock, for example, a single company. We know there is a fund, and we know that there is an index. What are the differences? What is the pyramid here?
Well, you need to take into consideration that how much you want to diversify your risk. Diversifying your risk means diversifying your portfolio of investments, which means, for example, if you believe that this company is very strong and this company have a lot of liquidity, in this case, you should have more stocks of that company. But if you think that the market is not sure, is unstable, in this case, you should have, for example, an S&P 500. To just give you an example, or you can have like a mix of stocks of the same market. For example, the best 500 company or the best 100 company, and you can have a mix of shares, and you can weight the portfolio, how much you can have of each in your portfolio. And then you have the index fund, which is even less riskier, but is not completely risk-free. An index fund basically have the all markets, the all shares that are in that market. For example, you can have an index of the US market, you can have an index of the UK market. This means that you have less risk, but you also have less rewards. If you choose some stocks that you believe that will go well, in this case, you have more risk, but you can have more rewards or more losses. It's the same, it goes the same way, but it's always good to understand what kind of companies have liquidity that I can invest in. Maybe they have some problems at the moment, but you believe that that company will become back again on top. Maybe that company is making a lot of investments, and in this case, this is why the stocks are down, because the value of the shares is down, because they need to recover, for example, from an economic downturn. In this case, this is a good moment to buy some shares on that company if that company is at a low price, but you know that that company will make some investments and will recover. And it means that, for example, if you look like some famous stocks, usually they were like half of the today's price. You see, and then they make the double, they make the triple, but not all stocks are the same. So you need to understand who is managing. You need to do your homework, basically. Who is managing that company? think like an investor, not like just a trader. So think like an investor, like a private equity company, like a venture capital company. How do they think when they take a decision to invest in a company?
And I think this is very important to note, guys. The idea here that you know, we have different ways of investing. We have short-term investing, medium-term investing, long-term investing, and of course they might overlap. Sometimes, as Florin mentioned, some stock may go down and suddenly your short-term investment of 2 weeks becomes a long-term medium-term investment of 2 months, because you need to wait for that stock to go back up instead of panicking and selling it away. But it's important here to note, I think, that what we are, the more further down the line you're looking, the more into the future you're looking, the more you should think, as what Florin said, as this investor's mind, futuristic kind of idea, which is you don't see the company as it is right now and you invest based on that, but you see the company as it is right now versus what it can become. And this actually applies to anything in our life if you think about it. So you consider, even if right now, for example, we know that there is a lot of inflation around the world, and this is not to say that this is the best moment overall to invest, but definitely because of the stress that the market is going through, the prices are going to be lower in some stocks that they would usually be, because those companies have gone through some losses over the past year or two. And this is the kind of a moment that you look back at the company's situation 3 years ago, you see on which level the company had their stocks, and you can compare that to where they are right now. And this can give you a slight indication of what could happen if everything goes well for the company, because they will, ideally, they will go back to where they were, and hopefully they will even exceed. So looking into this, you need to take into account, of course, that this is all within the risk boundaries. There is no risk-free idea, but also what is going to happen in the future. And that is why it's so important for us to present to you different options, like a short-term, medium-term, long-term, because you may want to think about your future 40 years down the line when you're going to be retiring, but you may also think about your summer next year, because you'd like to save up some money or invest some money and change it into going away for vacation with family. Okay?
You know, I'm so excited, Wojtek, that we have this discussion, because this might change the life of all our audience, especially the young audience that we have today, because this is something that is opening your eyes, and it will help you to understand how you can retire happily, because you are understanding, you're not practicing, you understand what is value. Because nowadays, when the inflation rate is high, usually bonds do not perform so well. Usually stocks perform better than bonds when the inflation is high. When the inflation is low, in this case, maybe, and if there's not enough liquidity in the marketplace, in this case, maybe bonds can perform well. But usually, historically, always shares and stocks, they perform better than bonds if you know what we are doing.
And I think it's really important as well, as we've talked last week and the week before, and we're going to go back to that, is to look at different options and different assets. And this is something that you guys should at this point take it as a base, that there is not only stocks, there is not only bonds, there is not only crypto, there is everything and anything, and you should find your own cocktail to make the best kind of solution for yourself. And this is to make sure that you don't put all the eggs in one basket. This is such a classic saying to continue with. So right now, before we jump onto the final part of this conversation, I wanted to ask you, Florin, what would you tell us in terms of how should we even start to consider which stocks and shares or sort of funds, indexes to choose from? What is maybe a 3-step idea of going from now I want to invest some money to, oh, I actually have money in some stocks and I'm waiting for them to bring me success?
Well, look, consider your age and your risk appetite. and your psychology profile. So you need to take into consideration these three aspects. So how old I am, what do I want to achieve, how prepared I am to risk, how fast I want to achieve what I want to achieve. Because I think it's important to understand that, especially at your age, I think it's important to make educated decisions and take some risks. But take the risks that are educated risks. Basically, learn about company valuations, how you can evaluate, learn about news. So basically, be informed about what's happening on the marketplace. What are the USA federal government decisions, like Federal Reserve decisions. Dig into the news, and usually when are bad news, be happy. When are bad news is a moment to buy. When are good news, you start selling. Because you never wait for the best moment to sell, you never wait for the best moment to buy. You buy in stages and you sell in stages. You always take notes about what price you buy a stock, what price you can sell a stock. You never wait your stock to make, for example, double. You can wait your stock to make 50% profit, and then you sell it, and then you buy back.
And I think this is something that we've put into a bit more of a recipe in last webinar. So if you'd like to check the webinar number 3 to see what are the different percentages that we maybe suggest you consider when you're investing short-term, medium-term, long-term. But what is very important from Florin here, I think, to take into account is this is something that we will not really be able to fully make you understand unless we would be sitting here for another 6 hours, because I think that's how long it took me overall to read the book. But it's useful to understand how money works and how value works. And the book, the Bitcoin Standard, I definitely recommend to read it. I finished it as I promised before this webinar, and honestly, you know, even if it's not about Bitcoin itself, even just the first part of the book, which explains how money works and what actually money even means, because we think we know what money is, we use it every day, but do you actually know how the Federal Bank of United States can affect your wallet? How is that connected? And this is no conspiracy theory, like this is the market. How is that connected? So yes, trying to understand it on your own. And if you'd like to read the book before our next webinar, I definitely recommend. Now, for our final question, before I give the stage to our participants, I wanted to ask you then, Florin, what would you say is in terms of short term, medium term, and long term, what would you say, can we match up those index and ETF and one stock? Is there a correlation, for example, for short term stocks, for medium term ETFs, for long term index funds? Is that something that I'm getting correctly, or how does it work?
Well, I think it's a mix of everything. Basically, for a short term can become a medium term. Or a long-term strategy based on how much you can wait. Basically, you know that kind of expression, diamond hands. Diamond hands means keeping holding of your stocks as much as you can, because you can afford to lose everything. For example, because you care, you know that company will succeed. And for example, a stock that is bad now, for example, can become a very, very successful stock on a long term. For example, this is what I want to say. Maybe, you know, and then and vice versa. So the same. For example, what you think that is very good now can become really bad decision on a long term. So you always need to look and to take decision at the right moment, and not wait for the best moments to happen to you. You need to make sure that you have a balance between short term, medium term, and long term. And because we are speaking about like index funds and also exchange traded funds, because you have a difference between index funds and exchange traded funds and pension funds, and as well like and stocks. So everything is connected. You know, a pension fund, they make their money because they are investing in in bigger companies that have strong assets under management, and they also make investments. So even if you are having your money into your pension fund, still the pension fund need to make investments in order to generate more money for the pension members, for example. But those decisions are made by people like you and me that are educated. Why you cannot become your own decision maker? Basically, because you become an educated person into the financial world. In this case, you need to learn how to evaluate a business, how to make sure that the company CEO of that business, for example, is a strong person that can drive success to the business. You need to look into and find information about that kind of stock or that kind of company. You know, this term of stock is because you have something to sell. The term of stock, you need always to have something to sell. If you don't have stocks, you are like someone a gardener that is selling vegetables, but you don't have vegetables for sale. So you need to always buy cheap vegetables and sell at a better price to your customers.
I like that. And if anything, of my final word for this, maybe a bit late, but better late than never, is this idea, guys, as well, to pay in mind, and this is something that we've discussed in another episode as well, and we'll get back to it. Pay in mind the capital, the market cap for different stocks, because this is going to play a huge influence, huge role in the stock itself. So for example, just to make you understand, if you have a stock that consists of 10 pieces of something, if I have one of those pieces, I'm 1 of 10 overall. So my decision impacts the other stock prices on the level that 1/10 impacts that. But what would happen if I'm 1 of 3? Suddenly I have a much stronger position, and my decision will have a bigger impact on the price of the other stocks. And this is something that happens again and again when billionaires of this world decide to buy or decide to sell huge amounts of stocks or crypto or anything. There is a certain level at which, a certain range at which you can truly shake the market and make it dance as you play. So considering this and having this in mind, remember that whatever investments you're putting in, try to understand how big of a ripple does your little piece have in the whole puzzle. Because ideally, at some point, you want to get to the point when your piece is strong enough that even if the whole puzzle is shaking, you're still on the right side. But of course, we're talking of taking things one step at a time. So I hope I made myself clear. For now, let's bring ourselves back. Feel free to turn on your cameras or your speakers and prepare your questions, basically.
Hello. I have to turn off my the unmute thing at this point. I have a question. And I think it was almost answered in the last 2 things that you guys spoke about anyway. But it's like, as a beginner in buying stocks and crypto, like where to look basically. And I guess you said do your homework, look at the progress it's made and what it can become in the end. And the other one was like about books to read, which I can probably gain knowledge. Of course, it's not going to give you the experience of actually making the risks on the market, but some, I guess, informed knowledge of it. And I think that you mentioned Bitcoin Standard or something like that. So I think I've answered my own question there.
But you did not answer enough, because I think you can add as well, for example, okay, what is a value for me? What is valuable for me? First of all, you should do an analysis of your own person, what kind of personality I am, what kind of risk I'm able to take, and how much I can afford to lose. And after you decided exactly, and you know exactly how much is your budget that you can afford to play with, in this case, you need to make informed and educated decisions, and you need to look into the company valuation, company market capitalization. Market capitalization basically means how much money is in the marketplace and how much is the total value of the shares or the stock of that company. If that company I would like us here a little bit to disagree a little bit with you, Wojtek, in regards to power. If you are powerful into that marketplace, basically, if not many investors have invested in that company, this is a difficult decision, and this is a not a good situation that you should be in, especially at the beginning, because you don't have liquidity. But if you like to risk, for example, you can invest, for example, in a stock that does not have so much value, but is very risky for you. And it's important to understand how much you should have a combination of different kinds of stocks, of stocks that have liquidity and stocks that do not have liquidity. But you need to make your homework to understand the CEO of that company is able to drive profits of that company. You need to look into who is the CEO, what is the experience, the board member, basically, and also learn about the company valuation. What kind of assets that company have that have that kind of value. You need to do a little bit of to learn how to read the balance sheet and the profit and loss statements.
I think this is actually a great idea for one of the maybe later webinars, you know, to understand the cash flow sheet. I think this might be something that is a bit of a black magic for people. Definitely was for me, and I'm still learning. So, girls, Tomek, if you're still around, anyone, any other questions? I know that Sandra joined us a bit late, so I hope
Welcome.
you caught up. Any wonderings?
Well, I was wondering about this liquidity, like how can we define this? But later you answered that like once we get to know the company and we learn about the background and past, then we can predict it by ourselves, right? That this company is worth taking a shot, or just not even taking a shot because we feel like it's a stable company, so we are sure that we can just put our money in it, if I understand correctly.
Well, Hannah, I would like to tell you that you can evaluate a company by the market capitalization. Market capitalization is the total value of the money that is in a marketplace that is divided by the number of the shareholders of that company. If a company, for example, is valuated at $1 billion, it means that you have, let's say like this, 1 million shareholders that have $10 shares, for example, like $1,000 per share, for example. And it means that you have liquidity, because definitely your shares you can sell to other shareholder in the public marketplace, for example, on the stock exchange, and it means that it's easy exchangeable. Usually when you have high inflation, for example, if you have good stocks and then those stocks are liquid, in this case you can generate more income, more profits, because, for example, you buy a stock with 500 and you sell it for 600, you already generate a profit of 100. And then you don't have to wait for the best moment to sell, or you don't have to wait for the best moment to buy. You can establish some targets that you are happy with. For example, I'm happy with 10% profit. Simple. I'm happy with 20% profit, and establish for yourself some targets and take into consideration that the inflation rate as well. If you are a trader, it's important to understand that you need to have assets to sell, right? And like and if you don't have assets to sell, how you can generate a profit? Because this is how usually when inflation rate is high, you need to put your money into different assets, not just shares, but any kind of assets like gold and property and anything else that can increase in value over time. Because if the government is printing money like crazy, how you can make sure that your money is not devaluating?
And yeah, sorry, Hannah.
Yeah, I just wanted to say, because I have a situation right now with currency. Wojtek knows that I started to exchanging my zloty into euro, and I have the situation that I think I'm watching the exchange going up and down, but when I put in my money first, when the euro was really low, and I still have this euro there, but I can't seem to like take a risk to move another money into euro because I feel like it's always very high, and I don't know if I should just like even lose a few percent and just exchange it because it will probably go bigger, like higher, or should I just wait? And I don't know, because there are also on those I can see that it was, for example, cheaper, like I don't know, 2 weeks ago, but I didn't put any money in it, so I lose my shot, and I don't know if I should wait or I should just buy more euro, or I don't know what to do actually, because I still have those money and I will not exchange it to zloty because it's not very profitable. So I'm just sitting with this exchange money.
Well, I have a solution for you, which is none of them. So basically, what I want to like to suggest, read first the Bitcoin Standard book, because you understand what the money really is, and the difference between fiat currency, which is a fiat currency is issued by the government, and what is really actually having money. So basically, money does not make having a currency. Having money means having something of valuable that you can sell and generate either profit or capital appreciation or income and cash flow positive. So money, it means that you need to have assets. So if you think that, for example, like now the exchange rate is not very good, buy some assets that in time you can sell it for a profit.
Okay.
Assets means like other types of assets that you can increase, for example, or maybe create a cash flow positive system. Maybe buy something and then rent it, or you know what I mean. So a cash flow game of Robert Kiyosaki. I think you should play this game, cash flow game, and buy it, and then as well read the book, the Bitcoin Standard, because you'll understand from this book is not just about the Bitcoin, is also about what is money and what people appreciated the value. Because here in this book it will also speak about the gold standards that was before the gold standards. In China, for example, was silver standard, and now because we are in the era of Web3, now people start slowly to put some value on Bitcoin as well, not just gold. So gold, Bitcoin, like something that is inflation hedge, that is hedging inflation. And inflation, because it's pretty high, I think it makes sense to have something that goes as long with the inflation. This is not creating you a profit. Usually what is creating you a profit is assets. So having assets, physical assets or digital assets.
Okay.
I think I don't know, Florin, maybe maybe you can answer that, but I wonder, just because I know that Hania is traveling in 2 days and she will have to be using euro, and I believe that euro's inflation right now is lower rate than Polish zloty. Like zloty's inflation right now is crazy. Would you say it's better still to keep it in zloty, or would you say to change some of it to euro, since she's going to be using it in a moment anyway? Because she won't be able to read the book in 2 days for sure.
No. Okay. What I want to suggest, Hannah, is the fact that use what you need, but don't go over. Basically, be patient, because the best skill.
I will not use euro because I already made another account on Denmark money, because they don't have euro. They have another one. So I'm not using euro, and I still have them there. But at the same time, I have some some surplus of zloty still, and I am sure that I will not be using zloty in another 2 years, not so many as I did till now. So I was also thinking about, should I put it already on my Denmark account, or should I invest it in something? And I don't know if it's not too big amount, but still I was thinking if I want to keep it for sure, because I'm starting new life, so I don't want to invest anything and then call my dad to help me. But I was thinking what to do with the zloty, but I will not touch the euro because I don't have to use it anyway, since there's other currency. So it's staying there for now.
Well, think about having some assets that you can have an income from those, because if you lose on the exchange rate, it makes sense more for you now to think about like buying something that can increase your value that is staying there. Whenever you think about saving, we usually have this mentality about saving, but saving, it does not giving you any profit. And if the exchange rate is bad, it's natural feeling that you need to wait a little bit. You don't have to hurry, and then wait for a better moment, for a better exchange rate, and then use that thing. But if you want only to exchange it to keep it, better don't do this. Because if you want to exchange it to buy an asset that can increase in value, then do this, because you buy an asset that it can increase in value, or you buy an asset that give you cash flow. So you have two options. If you have any money that is sitting, because money that already our money devalued about 14 to 15% approximately in the last 2 years. So basically, someone that were putting the money into the bank account, for example, and were just keeping there for 0.5% interest per year, they already lost a lot, because the government print a lot of money. And when you read this book, the Bitcoin Standard, you'll understand what is fiat money and what is really money.
I think
I hope I could help you, Hannah. Basically, don't need to take rash decisions.
Yes, okay, thank you.
Welcome.
I think we're on the good lead here, and definitely, guys, like 100% the Bitcoin Standard. Maybe there is another book as such that explains what money is, but it was very eye-opening for me and very helpful. And not to advertise anything here, but that book is probably worth reading. Sandra, Tomek, do you have any questions? I saw that Tomek joined us just a moment ago. I don't know if the connection was broken, or are you there, Tomek?
Yeah, for some reason I was out for a second, but it was a short second, so no worries. I heard everything.
Beautiful. Do you guys have any other questions?
Actually, I do not have any questions today, because everything was pretty clear, and the other questions from Connor and from Hania really helped also. So I think I'm all clear.
Sandra, I would like to understand from you, what is the reason why you joined the call, and I would like to understand more about what is your goal, like to understand how you can become like more financially educated.
My goal, well, basically just to understand better, like just to, as you said, like to actually know what you're doing, because I don't really know much like about this investment thing. So yeah.
What kind of personality you think that you consider yourself? Like, you like risks, or you like or you don't like to risk? So how do you see yourself?
With money?
No, not just with money. Like the type of personality you are, because it is very important for yourself to answer to this question.
Risky. Not the more risky person. I don't know.
What do you
think? This is a question for you all guys to consider for yourselves, 100%. Yeah.
If you lose something, for example, how do you feel about yourself?
I guess it depends what you lose.
Let's say like this, for example, you lose an opportunity, you lose some money, I don't know, you lose something that it was valuable for you.
I guess it's okay. Like, it's if I have to invest some money to actually get something of it, I will risk it. Of course, I'm not gonna just put myself in a situation where I could just lose everything I have. I wouldn't do that. Yeah.
That's why I think it's important to make sure that you prioritize what are your goals, and how you can learn something out of that situation, because many times we do not learn from that kind of bad situations, and we think that we just wasted our time. But I think every experience is a learning experience, and as long as you understand the risk, you make informed decision. usually mistakes come when you don't know about the risks and you don't invest in yourself to make educated decisions. And usually when you don't control yourself about fear and greed, many times this kind of two things are affecting our life very, very much.
And I think at this point, guys, it's worthy to mention as well, especially if you've not had a chance to see the webinars before. We've maybe just before we finish right now, I would invite you, Florin, to give us a little breakdown of. I remember we've discussed how many percent, or roughly how much of our money we should consider as the investment, and how much of it should we safely use in a day, because this is something, you know, budgeting is something that affects us all. And I found it, especially when I moved to UK and started living on my own. Initially, I found it quite challenging because, you know, you want to attend to everything around, and at the same time you want to pay your bills. And I wasn't thinking about investment at the time. Could you remind us, what would you say is maybe the minimum nice percentage that we could consider saving, actively saving, let's call it active saving, so it doesn't go to waste?
Well, I really appreciate the Jewish mentality in regards to investments. And I will start with that story. So basically, how Jewish people teach their children about investment and about money. If you can live with 50% with whatever you win, this is good. And then the remaining 50%, you should divide it in another 4 pots. So basically 50% is for day-to-day operations to live yourself in a comfortable way. And then the remaining 50% you should divide in 4 buckets. 10% you should put for the charity, because we are human beings and you need to have to make sure that you also help people in need that do not have the chance that you have. 20% you should put for investments, and 10% you should put for your training, and 10% you should put for unexpected situations. So basically, if to answer to your question, I think you should consider it at least 20% of your income to put for investments.
Beautiful. And I think I quite like that. I don't know if you've had the chance, Florin, to check The Richest Man in Babylon yet, the book that I mentioned the other day. They suggest the sort of 30% rule, which is 20% is for investments and 10% is for charity and 70% is for life. So here Jewish mentality just adds that 20% on top. And with this, guys, I think this is a good time to finish off. Thank you so much for coming. If anything, it was a pleasure, and I'm really happy that we've had quite a few participants and quite an active few. I don't know if Tomek is still with us, but it's been a pleasure, everyone. I hope that you enjoyed yourself. We're gonna be here yet again next week, 7 p.m. UK time, of course. And
Wojtek, before we go, please use your phone and let's have a nice picture. Make yourself a picture of the screen, and
okay.
to save for the memory, because you never know, maybe will be super successful, and then in this case we remember this for the history.
Sorry guys, just a second, because my phone is not with me.
I really enjoyed this moment as well, because I consider like speaking into the future for my children as well. I'm a father of 3 children now, and hopefully today or tomorrow will come the 4th one, and I'm excited because I'm looking how I can add value to them. This is the reason why we have this meeting as well. Let's say a nice cheese. Wojtek, you can make a photo if you want, because I don't have the phone.
I'm ready.
Ready?
3,
okay.
2, 1, cheese.
Yay.
Cheese.
Thank you.
Nice, of course, beautiful. I'll send it your way and we can post it. Yes, guys. Well, so thank you so much. I believe that next week, if you can make it, it would be really, really beautiful. Next week, we're going to be talking about the business mindset, how to connect the buyer and the seller, and crypto. So much more short term. This might be something useful for you guys who are, transitioning from one chapter of life to another, or have a very short time to make money. And other than that, if you've not seen the episodes before, feel free to check them out. I think it's really useful, and it will also add a little bit of narrative to what we've been talking about, because if you jump halfway through, it might be a bit challenging to understand it all. Other than that, enjoy your evening. Thank you so much, Florin, for this, and I'll leave the last words to you.
Thank you very much, Wojtek, for having me. Thank you to all of you, Connor, Tomek, Hannah, and Sandra. I hope you become super successful. And as a last word, I would recommend to take a mentor that is able to challenge your thinking, and have a mentor that is able to guide you all your life, because having a mentor is very important if you want to become super successful. A super successful person usually is a lonely person many times, and you need to have someone that is able to challenge you, and don't use yourself whenever you are in the comfort zone. Get out of that zone, because this will be it will make you to get stuck in that position. So I hope you enjoy this meeting, and enjoy the evening. Take care. Thank you for having me. Thank you, Wojtek. Thank you to all of you. Take care.
That was
Thank you, guys.
Bye-bye.
Bye.
Bye-bye. Take care.
all the abundance to you and your newest family member too.
Yeah, thank you. Thank you. Thank you. I really appreciate that.
Yes, take care of the new baby, and I'll see you soon.
Thank you. See you soon.